Hey guys, Bill here, and in this video we're going to talk about a few more different types of ways to play the inside bar setup that go beyond the traditional confirmation over call trigger for calls, confirmation under put trigger for puts that we showed in the first video, because it's not always going to be that simple. You know, those are great days when you can just follow the basic concept and make a bunch of money. But sometimes it's a little trickier than that, and we need some more options to take advantage of these setups. All right, so the first way to do that is on retests of the triggers, especially after gaps in pre-market, gaps up or down. So what we're gonna look at first is NEO from August 11th. That is something that was one of my top watches that I posted in the room, and I know a few of you guys were able to take that play, and it went fast. We made like 100% in like 10 or 15 minutes. Perfect retest example. So what we see here is here's the previous day where the inside bar started. So we have the high of day, low of day as our triggers. Little bit of a gap up in pre-market here, jumping over our call trigger. So I posted in the room that morning that, hey, let's try to play the retest, okay? Now, with retests, especially off the open, when things are more volatile and they move quick, you're not really waiting for confirmation like you are on the call triggers or put triggers where you're waiting for like a 10 or 15 minute candle close. You kind of got to trust it a little more. And for that reason, I'll go in smaller size. All right, so I might take a half size of my normal position or even a third size. And the reason I do that is because if this trigger doesn't hold on this retest, you know, it can flush hard and fast. You know, in 5 minutes, you could be down 20, 30% and you need to cut. But when it's 30% loss on a third size position, that's just a 10% loss on a normal position you would take, which is a paper cut. And we can accept that because the reward of this working out is 100% move in 15 minutes, right? So if the, you know, you can make 100% and you're only going to lose 30 because you're going to cut if you get knifed off the open, that's a 3-to-1 risk reward, and that's great. All right, so let's talk a little bit about how I would approach entering this position. I'm on the 5-minute chart, and as you can see, we get a wick down basically to the cent. It doesn't hurt that there's a 50 fib right there to act as more support. But basically when this happens, I might not enter on the split second it touches it, but I'll be in within a minute probably. I'm just making sure that we don't crash right through this level. So I want to see it touch, and I want to see it put up a fight and maybe start moving up a little bit, and then I'm in my position, because this is a momentum trade, right? This is off the open in first 5 minutes, and things are volatile. And if you wait for 5, 10, 15 minute close, look, half the move's gone, right? And then you're coming up on some fib resistance here. So really you want to enter as close to this trigger as possible, which is something I apply to all inside bar trades. I always want to try to get in close to my trigger, whether that means I have to wait on a retest or maybe I just get a nice close that's a little bit over, so I feel great about entering. You want to get in close to that trigger, and this was just perfect. It just worked perfectly, all right? It's not going to be like this every time. Sometimes you're going to get unlucky. It looks like it's holding, you enter, and it flushes. But like I said, this is why we take smaller size, so that if we get that flush, we can cut it down 25, 30%, which is really at 10%, you know, or 15, depending on what size you took of your normal size, and you live to, you know, you live to your next play. You can get it back. But that is one example of the retest. And these retests can happen in the middle of the day too, like Mr. Feeney's example earlier today posted about Apple. That got a kind of nice retest in the middle of the day that then bounced off of it again for puts. And you can play those with a little more, a little more confirmation, because it's the middle of the day, things aren't moving as quickly as they do off open. So in that case, maybe you can watch it reject and close a candle, then get in. You can be a little more patient. You can size a little heavier because, you know, there's not as much big moves that can really hit you hard for a loss. All right, so that's one example. Another example is what I call playing the range. And we're going to look at PFE here from the 16th. All right, so here's the previous day's high and low marked inside bar. And This is trading in the middle of the range in pre-market, and then what happens is we get a little flush down. Now, playing the range, why this is great is these are for those days when the market's choppy, when SPY is trading in like a $3 range, and there's really no consistency in breakouts. So why would we be expecting stocks to make huge breakouts above the call trigger or below the put trigger given those conditions, especially stocks that are bigger names, that are more linked to SPY? You know, we're not talking about pennies and things like this that can just run any day for no reason. But if we look at PFE, we come down, it tests and rejects hard up. So, you know, on a normal day, maybe we're looking for put confirmation below, but today it rejects it. So it's showing some strength. It has support at this put trigger. And then it makes a nice little bounce up and it comes back down and it tests it again. At this point, the market's been open for 35 or 40 minutes, and you're able to look at SPY and say, hey, look, you know, today's pretty choppy. We're not getting a whole lot of range out there. So you might start to think, well, I don't really want to play puts here. I might start looking at playing the range on this stock and see if we can get a move up for calls to the call trigger. And that's what we get. You know, we get even one more retest. It just keeps bouncing off here. It's showing that this is strong support. So I would probably enter calls here and maybe be able to take a little off, and then I'd be back down to my average. If you're really patient, you would have waited maybe even one more time and entered here when the market's been open for over an hour and you even have a better read on what SPY's doing. You enter these calls here and it's a nice trend, higher highs, higher lows, all the way up to that call trigger. And that's what's great about playing the range is you have a built-in target, profit target and loss. If we get a close below the put trigger here, we'd get out, right? And we can scale along the way. And we have our end goal of being, you know, the top of the range where we normally take calls. And you can just see it runs up perfect, goes a little bit above it, comes back down. Really respected the call and put triggers just in a different way. Normally we're using them for the breakout. This time we're looking at them for rejection and playing in between because SPY had no range that day and there weren't a whole lot of breakouts happening. Lastly, and this kind of is similar to the Neo play, but it wasn't a retest. So let's look at DVN from August 18th. This is what I like to call playing the momentum off open. And this is classic, perfect setup because of a couple reasons. Here's the previous day's high and low. We see that we get a gap up in pre-market, but it's not above the trigger. It's almost even better. It gaps right to the call trigger and starts consolidating. When I woke up and saw this, originally this play was like one of my alternate IB ideas, but when I woke up and saw this, it moved right to the top of my list. And to play these, another kind of a finesse play. This is the 5-minute chart. Look where the first 5-minute candle closes. It's gone already, right? And it's already coming up to major fib resistance after 10 minutes. So this is another example of one of those times where, you know, once you're more familiar with these plays, you get a little more confidence and conviction. You kind of see these things and you don't really feel afraid to take a position right away. I still only went smaller size. I don't remember if it was half size or third size, but I didn't size in full here because who knows? We could get flushed. You don't want to be oversized in off open ever, really, okay? It's just safer not to be. But we see this consolidation right at the trigger. Look how perfectly it just sits right there. And then it's gone off open. So I would just, you know, in these situations, I might switch to the 1-minute chart and just watch that first minute candle close just to make sure, you know, that it's not completely knifing on us, okay? So let's see, we go here on the 1-minute chart. It comes down, tests, funny enough, the 65 psych, like to the cent. A little wick down and it's gone. You could buy right here. You could buy on this candle close, the 1-minute candle, and look at your next candle, boom. Little pullback, people taking profits, more move up. This is a momentum trade, and so you gotta be quick. You go in smaller size to limit your risk. But again, you know, this is a trade that I think went close to 100% in the first 10 minutes. And obviously if you're playing, you know, closer to the expiration, they're going to move really fast. So this is just another way to play inside bars. There's lots of options. That's why I love this setup. You can do the traditional way, or you can kind of adjust it to different conditions in the market and make money going both ways, so you don't have to be biased about calls or puts. You have clearly defined range and levels, and it's just really easy to spot these because of the scanner, put them into your daily setups, and make some money off them. So if you guys have any further questions about anything I discussed today, I know it's a lot of content all in a short period of time, so just let me know if you have any questions and I'll help you out.